Okay. Good morning, everyone. Hope all is good. I know it's been a week. Sorry that I couldn't make it on Sunday. I took a little mini vacation with the family. So as you guys know me, my name is Aida Tazara. I am a CEO of Gojo Realty. I am a licensed real estate agent in the state of Minnesota, also a property manager. And we are here today to talk about budgeting. It can be for anything, but in this, usually here, what we talk about is about real estate, how you can invest on yourself and all that good stuff. So Peter is here every Wednesday, and Nick and Ben. We talk about anything and everything. We come up with a topic, that famous topic, because this is the stuff that they usually our buyers or investors ask question. So Peter is here with me today. He will give us all the hidden and nice and cool advice. Before we start that, we had a first generation down payment assistance class 2 weeks ago. And we really had a good turnout. And we're still going to continue to do that. If you are, and especially instead of Minnesota, you are the first generation to purchase a property, there is a down payment assistance that you can get forgiven in 5 years. Peter can talk about a little bit more about that. So if you are that buyer, please reach out to Peter or Nick or I. Will be able to connect you with all the stuff that you guys need, and then we can go from there. So good morning, Mr. Peter. Nice seeing you.
Good to see you too, Miss Ida. So talking about budgeting, and we talked about it a little bit a few weeks ago, but this week we just wanted to elaborate, and because it's such a big topic, elaborate a little bit more on it, and then also we'll talk about what we talk sometimes about, which is more like your dreams, goals, and kind of the big picture relating to that. Because a lot of times you come to a loan officer like myself or a realtor like Ida, and you're going to say, hey, I want to buy a home. We're not going to help you with buying a pair of shoes, or just, we're focused on real estate, like Ida said. So the point of that is thinking it through and not just looking at just the transaction. Buying a home is a very big deal, and you want to make sure that you're thinking through every aspect of it. So that way, once it's complete, then you don't have those regrets that, like I was saying earlier on this live, that about 75 to 80% of first-time home buyers have a major regret when they go through after they go through the process. And a lot of it, there's a lot of emotions tied to buying a home. It's probably one of the biggest financial decisions you'll ever make. And so a lot of times people are thinking more about, does it have the swimming pool that I ideally want? Or is this, going to compare to my friends and my family and the homes they've bought? And all sorts of like secondary things that really, yes, it's based off priorities, but not probably the top priorities you want to base your decision making on. So we usually like to start out talking to get more about like dreams, goals. Like they say, dreams are what you do when you're asleep. The goal is what you do when you actually wake up. So, kind of helping you think through that process, since we go through that all the time, as opposed to just saying, yep, we're going to show you a house, or yep, send me 6 documents and we'll pre-approve you and help you get the house, and then see you later and don't call us again. That's kind of the baseline for the industry, I'd say. And so even with these TikToks, the whole point of this is to be able to educate, have you ask questions, have you kind of work through things. And even, if you want to like on a live play the scenario, we could always do something like that as well. And so, so I guess thinking about, like, we went over budgeting last time. I don't want to go through everything I went through last time just because it might be kind of redundant, especially if you're on that. But in a simple sense, budgeting is making sure that your cash flow is good, both short-term and long-term. If you take out $100,000 loan and you're only paying $100 a month, that's nice, but that's a huge loan. So you're gonna be paying that off for a long time. So a lot of what we do, even in the pre-approval process for buying a home, is try to figure out, okay, what are your priorities based off this situation, and how do we help you think through things that you might not realize just again because you haven't went through this process a lot. And I'd say it doesn't, in my experience, it doesn't vary a lot between somebody who's bought 3 houses and somebody who's buying a house for the first time. If you went through the process, you definitely know some things to look out for. And if the process was not smooth, then usually those clients have learned even more. Like, I have a client right now that first time they bought a house, horrible, sounded like it was a very bad situation, very brutal. By the time they were done, they were just thanking God that they didn't have to deal with it anymore. And it kind of took the joy out of buying the house. And so this time, I didn't work with them the first time, but this time they're working with me and they're bringing up like, oh yeah, this happened last time and this happened last time. And how do we avoid this? And I'm like, oh, and they're realizing that those issues aren't coming up. And the reason why is because we're thinking through it, and budgeting is a huge, huge part of that. And they also became aware of things from a budgeting perspective of owning a house and that whole process to make sure that they don't have those issues like last time. I think one of the issues they had is they had deposited a large amount of cash in their bank account like a month before they bought the house. Underwriting doesn't like that. The banks don't like that because there's no way to show where that cash came from. That caused a major problem with their transaction. And it sounds like their loan officer either didn't explain it well, they forgot about it. I'm not sure what happened, but it became a big issue. And that was like one of like 8 things that came up throughout the process. So again, our job is to try to talk to you, get information from you so that, you tell us what your goals are, what your dreams are, what your plans are, both short and long term. And then we can help kind of direct you and say, this would be an ideal route to go because of this, this, and this. And then also give you the options. Say, maybe there's 3 different routes we could go. And say, okay, this is what I'm thinking. We kind of look at it from 3 different angles based off of your priority. Your priorities, I should say. Which one sounds and looks like the best one that you want to pursue. And then from there, we can kind of figure that out. So, so that's in a basic sense. And again, budgeting in simple terms, making sure you have more money coming in than going out. And
can I ask a question?
Yep.
So that kind of stuff is kind of hard for a lot of people that they have not done any kind of way of like saving money. As you know, that susu or ukup, it's one of a source of saving money in our community. That's how they think. So what do you think might be a good idea? Yes, susu, it's a source of like social life as well, that you go out and you hang out with your friends, you put the money together, and then they draw names and then someone will get it, right? So, and instead of doing that, if they know, most of them, they say that, oh, you know what, I'm buying a house, but I'm gonna go in a method of that I know how to do, like a susu or the ukup way, right? So here, when that money goes in the account, what will happen? I know you just mentioned that in a different scenario, but people say that that's my money. I've been depositing this money and they can see it in my account, but that does not work for you guys when you process mortgage. So what do you think? What kind of method that buyers or investors that they can save their money instead of doing the susu or the ukup way?
Yep. So I would say if that is your situation, definitely talk to us or your loan officer ahead of time, because there's a couple different ways to go about it. I'd say, So, and I guess, Ida, just to be clear, are you asking me to, like, as opposed to doing that, a different method for it, or
Yes.
with that situation? Okay.
Yeah.
So totally. So obviously, simple sense, that's pooling the money, and then somebody gets awarded a chunk of that money over time. So another way to go about that, and there's many different ways. Obviously, like if you're saving your own money, which is kind of what I'm hearing here, is not combining it with anyone else, but just saving your own money. You can, yes, you can leave it in like a savings account, things like that, and just save it up. From the bank's perspective, we do have to usually get 2 months of bank statements, and then we have to review that transaction history because the bank wants to make sure that everything's on the up and up, because these are, at the end of the day, investments that are bought. A lot of us in our 401ks and 403bs and IRAs, all that kind of stuff, they're actually invested a lot in the mortgage-backed securities, in the mortgages that all of us have. So our retirement might be invested in our very own mortgage. So because of that, there are strict protocols that are required for the investor. So if you think about it as yourself as an investor, if you're going to have, somebody's going to come to you and say, I want to borrow money. Mm-hmm. Usually the only time you'd borrow money to anybody is somebody you know well, because then you can kind of know if I can trust that person or not. In this situation, it's with investors. A lot of people don't know each other. You are invested in 401ks. You take advice probably from your company on what to invest in. You've never talked to the people that you're investing the money in. There's no relationship. And so because of that, in this situation, they make strict protocols and requirements to avoid having any misconceptions or miscommunication as far as like the quality of the investment. So that's where credit scores come into play. That's where type of income comes into play. That's where all the things that we measure on a pre-approval, that all those things matter to the investors. And if we think about it as if I'm the investor in somebody, would that matter to me? And yes, it would, because if somebody came to you and said my credit score is 400 versus 800, you're going to want to borrow the money to the person with 800 credit, because they probably pay everything back on time, never have an issue. The 400, we got to do more investigation because that's a pretty low credit score. Something clearly went wrong, bankruptcy, foreclosure, collections, something to get that score that low. So that's more of a high risk situation. So getting back to this situation, is the reason why they care about that money is because they, at the end of the day, they want to make sure you're not taking out loans from other people and you're over leveraged. Again, going back to the budgeting, where you have more money going out than coming in. And it's not really an issue anymore just because of electronics. But, and Ida and I have had this come up. We've had clients, now we try to remind you many times throughout the process, but that have like open credit cards in the middle of the transaction. We had one a couple of years ago. He thought it was through his work. They told him it's not going to be on your personal credit. He didn't think he should check in with me because he thought that they were giving him accurate information. And then 4 days before the closing, all of a sudden I get a notification about 20 minutes after he opened it, that all of a sudden there's this new credit card that got opened. There's about an $8,000 balance, and everything's paused until we get that information to be able to add it back in. Because the lender wants to make sure that you can pay back the loan. Just like if you were lending money to somebody else, you'd want to make sure that they could pay you back. If they told you, hey, I don't have a job, but I want to borrow $50,000, probably not going to do that. So same thing with this is, when it comes to that money in your account, they want to be able to see where it's coming from, and they want to be able to verify it. So that's why the cash deposits, they have defaulted to basically just assuming the worst case scenario, that money is not good money. So they will not let us use cash. So getting back to the main question of, with that investment, we want to ideally keep that in like a savings account. You can also put it in investment accounts though too, like a CD. I have clients that they have a CD, they put it in a 1 year CD. It has, let's say, 5% interest, and they get the money, and a year later, they know it's going to be released on a certain day. So they'll plan to buy their house around that time, maybe probably 3 or 4 weeks after that money is released. That way, they make the money from the investment. There's no issues where the money's coming from, because we can show that it's coming from a CD, things like that. If you are going to still be in that type of susu money situation, then I'd say talk to your loan officer, talk to us before you ever go out and look at a house, because there are a few different ways to go about it. Some loan types you can get gifts from people that you're close to, whether it's family or friends, but that has its own process. And again, biggest thing with any type of money being transferred, don't ever use cash, because cash is the one thing that the lenders do not like at all.
Yeah. So now you said cash, right? The confusion with the first-time home buyer, even as someone who is planning to buy a second home as an investment or a primary residence, they will say, how about if I deposit the check? How about if someone write me a check? So do you think that check, do you consider it as a cash as well? Because it's not earned. It has to be something that it is earned to be in the. So I wanted to clarify, then we'll go next, okay? I just wanted to say,
so checks are better than cash. So if your brother hands you $10,000 cash and you go deposit the cash in your account, or I've had a common thing is I've had this come up twice in the last year. I've had clients, one of them actually recently, after I pre-approved them, never told me they planned to switch banks. They closed one bank account, withdrew their money cash. We talked about this multiple times, but they forgot. Life happens, I understand. They took that $20,000 cash and they went to the other bank and opened an account and handed them the cash and deposited it. Now that money is basically not usable, because the bank is, even though, well, in a better scenario is a few years ago, we had somebody who took the money out of, as a husband and wife, they had their own bank accounts at the same bank, and they removed it from one account while they were standing at the teller and basically handed it back to the teller to put in another account. I don't know why they did it that way, but even though they never even moved physically, we have to go based off of paperwork because we don't have video cameras filming everything. Mm-hmm. And so the bank now said, okay, that money, we cannot use it, because even though we can see that you withdrew it from this account at 3:02 p.m. and you deposit it in this account at the same bank at 3:03 p.m., just the way the guidelines are in the requirements, even though it looks obvious in a common sense term, that doesn't meet the investor requirements. And so our investors are not going to be happy about this. It doesn't meet the requirements. And so getting to the check, checks are a lot better than cash, because we can show where the money came from, because it has to come from a bank account. Cashier's checks are a different thing. That's a whole nother thing. But a regular check will show what account it came out of, who it came from, and where it was deposited. So if Ida wrote me a check for $1,000 and I deposit my account, usually in that situation, we would have to get my bank statement, a copy of the canceled check after it was deposited in the account, showing that the bank had deposited it, because they'll stamp it and they'll basically sign off on it that it was deposited. And then we might also even have to get something from Ida, like her bank account, showing where the money came from. Now, there are situations where we can do, again, going back to those gift scenarios and say, okay, this is a gift for the purchase. This is not a loan, and all of those things. So a check is better, but it's not bulletproof. So we still want to figure out what's going on. And if Ida wrote me a check and I deposit my account, then they're going to come back and say, okay, why did Ida give you $1,000? Because that's not a normal thing. People don't just walk around handing out $1,000 checks for no reason. Usually is it a loan? Did Ida write you a loan? If she did, then we need the loan paperwork. What's the terms? What's the minimum payment? And then it kind of works just like a credit card or an installment loan, where it's like, okay, Ida gave me $1,000. I agree to pay her $100 a month. And in 15 months, I'm going to have paid her back $1,500. So she's going to make $500 interest. That'd be a really good loan for Ida to give out. But she'd, gain $500 in interest. But then that would be the term. So then they say, okay, Peter has a $1,000 loan, $100 payment. And now we're going to factor that into your debt versus your income ratio, which is a big part of determining the price of the home that you can purchase. So yes, cash is is the worst form. Checks are better, but we still have to document it. And same thing with wire transfers. If somebody wire transfers you money, it's basically a check. It's just an electronic check. So we still have to go through that documentation process. And again, if we're doing a pre-approval with you or anything else, always bring this stuff up to us ahead of time, especially, whether you're planning to buy a house immediately or 6 months from now, because then we can go over those things with you, because there are thousands of scenarios that could come up. So we're not going to sit and spend 3 hours with you going over every possible situation, which is where you can really help us by communicating with us what your situation is, very detailed. And again, that's also where we try to ask questions to be able to get that information from you. But don't be shy to tell us what's going on, because then we're going to be able to help guide you.
Perfect. Thank you. Thank you, Peter. I muted myself and I just unmuted. So perfect. Let's tap the screen, my friends, and thank you, the people who's doing the tap and copy link and all that. I appreciate you guys. Keep doing that. We get this kind of client all the time. So the first thing that they ask is like, what should I do? What can I do? What is my next step is this and that. So, I know you come up with a topic that you wanted to feed us today. So I'll be quiet. You go and do your thing. And then if I have a question, I will unmute myself.
Okay. And again, anybody who's on here has questions, feel free to ask in the chat. We'll make sure we answer that. So what I would say, getting back to like that dreams and goals, and that goes along with the budgeting, like a great story I always remember is Shaquille O'Neal, the basketball player. I think he's worth like $500 million today. So like 400 or 500 million, something like that. But one thing, when he got his first $1 million paycheck, what he talked about was, he was a kid, didn't really understand money, no financial training or teaching or anything, no background in any finance, very young. And so the first thing he did was, all right, yep, I got $1 million. I'm going to go buy a Mercedes. And not just a regular Mercedes, but like a $150,000 Mercedes. And this is in the early 90s. So the top, like probably the best one you can get, probably like $300,000 today. And then he went home and his dad was like, where's my car? So he's like, oh, sure. So he went and bought his dad another $150,000 Mercedes. And he went and bought his mom a $150,000 Mercedes. And he went and rented an apartment or a condo that was like $35,000 a month or something like that, which today would probably be like $120,000 a month. And he's just spending money left and right. And the bank had to call him and be like, hold on a second. Yes, you're getting paid. Yes, you're, the next great athlete in the NBA, but you're spending your money way too fast. And first off, you didn't even get $1 million. You got like $650,000 because you had to pay your agent 15%. You had to pay the government taxes. So, and again, I don't think any of us on here are probably making $1 million paychecks. I know I'm not, but the point of that is when we're making money, especially if we feel like we're in a good financial situation, that's when we tend to be the least aware of our finances. If we're struggling, we're counting every penny. And we're like, okay, where's every single penny going to? Well, if we start to make money that we feel is like, all right, we're making more, things are going well. It's like, oh, I can get this. And that's exactly what Shaq did and he said when he was younger, he kept struggling with his finances at the beginning. And I think it was somebody at the bank actually recommended to him, like, here, read this book on personal finance. Approach this like a business. Look at your finances like a business, not like, a kid that just won the lottery. And so that helped him build himself up. And he's made more money, I think, outside of the NBA. He made like $300 million in the NBA. And he's made more money outside of the NBA because he learned those things over time. Nobody's going to learn it overnight, but then he has started applying them to the money he was making, and he's made a lot more. So while none of us will probably be worth $500 million, we can still apply these, those lessons to ourselves. And the best time to start is today. And just as basic as it is, if you guys need advice on this or where to start, we can always send you guys stuff. feel free to reach out. But a lot of it is having the right mindset. And this isn't taught in school. This isn't, unless you're, a lot of our parents weren't educated on this either. So it's not passed down generation to generation. But one popular thing that has been recently is, building generational wealth. And real estate is a great way to do that. So learning to apply these concepts and learn them in a basic format will help not only help us make money and save money and put ourselves in a better financial situation, but also help us avoid pitfalls. And so getting back to kind of this whole dreams and goals thing is not just pre-approving you and saying, all right, you call me as a loan officer. All right, what do you want to buy? All right, yada, yada. Send me these documents. You're pre-approved. Go buy the house, close on it. See you later. Is thinking again more of what are your long-term goals? Is this your forever home? Are you planning? I have clients right now that they're planning to buy it. We just closed on with Ida a couple weeks ago, planning to buy it and probably live there for a year or two, maybe a little bit longer, and then probably buy another one and move out and rent that. And that's a very popular thing. Live in the house 1 to 3 years and then rent it out and buy another one. And over time, you can slowly accumulate properties. There's a lot of benefits to doing it that way, especially if you don't have hundreds of thousands of dollars to invest. So again, this is where we would talk to you about those things. And if you're like, yep, I plan to live here forever, or at least the next 20 years, that's a different conversation than somebody that says, hey, I'm planning to move to New York in 3 years, or I'm planning to rent this out in a couple of years and buy another house. And this is more an investment property versus my perfect forever home. Because usually investment properties, you're not going to buy the house that's specific to you, especially if it's really unique. You're going to buy something that's more straightforward, that people are going to want to rent. It's going to be easy to rent. It's going to be easy to maintain. You're going to be able to maintain a profit margin on it. It's in a good area where people want to rent, low crime, all those things. And so that's where this dreams and goals conversation, which is more just like getting to know you and saying like, okay, I don't want to just be your loan officer who takes your order like we're at McDonald's. Yes, I can go get you a cheeseburger and make a great cheeseburger for you and you can eat it and you'd be happy. But really what we want to do is help you think through like, okay, like your diet per se. Like, okay, is this even the right food that you want to be eating? If your goal here is that you want to have a 6-pack and, have 3% body fat, McDonald's probably isn't part of the diet, And again, yes, you get, so when we can figure those things out by asking you questions and then you also being open with us and sharing that information, then we can use our expertise to say, okay, this would be a good option for you. This definitely would. This other option that might be a good option for most people, and we might have thought going into the call, most people, this is the right option for them, is like, okay, no, because of X, Y, or Z reason you told us, that's actually going to be a bad situation for you. We want to keep you away from that. And then just from purely a financial standpoint too, the type of loan that we help you figure out which one's the best for you might be dependent on that too. Sometimes, if you're planning to be there short or long term, looking at what's trending with the interest rates, if they're going down or up because they go in cycles, all of those things are important for us to understand, because at the end of the day, the real reason you're coming to us isn't for the best interest rate or the best service. You're trying to get the cheapest money you can for your situation. And service is great, interest rates are great, but we want to look at the whole picture there, because I'd say a true top quality loan officer is a debt management specialist, not just an order taker like McDonald's. So, and if you really want to just have the order and that's it, we're not going to press you, because it's more work for us for the same amount of money to do that. So I have clients that are like, nope, I just want to do this. I had somebody tell me that recently. Nope, just pre-approve me. Don't want to talk about any of this for whatever reason. All right, that's fine. We're not going to press you. But if we can provide that additional assistance and helping you with those things, there's a lot of potential progress that you can make in personal finance that you probably aren't going to get from anywhere else. And if you do want to get it, you're probably going to have to pay somebody to be able to give you that information, or do a lot of research on YouTube and the internet and all that type of thing and kind of piece it together yourself. So that's where we try to have those conversations because, again, and even help you think through some things that you probably never thought, oh yeah, do I want to live here for 5 years? I keep talking about moving to, I have a friend that keeps talking about moving to California. So like, she's kind of going back and forth, and it's like, well, if you plan to move to California in a year, it's probably not a good idea to buy a house right now in Minnesota, unless you plan to keep it as an investment long term, because the cost of buying and selling a home is not cheap. There are upfront costs that are associated with it that get diluted over time. So her situation, I was like, well, if you're planning, probably move to California, unless you're planning to keep it as investment property. And based off the other information she's given me, I'm like, yeah, it's probably not a great time for you to buy. But again, everything is going to come down to your personal priorities. And our job is just to help you figure out what those things are and give you the education piece and the knowledge piece to be able to go down that path. Because if you want to visualize it, think about like, you're at the start of a race and there's 8 different directions you can go. Who knows which way is the best way to go? But if you have a guide, just like if you go on vacation somewhere and you go with somebody who's already been there, they can show you and be like, oh yeah, that attraction, yeah, everybody goes there. It's expensive. It's not really that great. Don't waste your time. It takes the whole day. And at the end of it, it's a waste. And they could say, oh, this other thing over here that nobody's checking out, it doesn't really look that appealing. Once you actually go check it out, it's really cool. And it's actually not very expensive. And it's not crowded. And like, yes, you can Google some of that. Yes, you can look some of that up. But especially if that person's already going with you, why wouldn't you take their advice? And so it can save you a lot of headaches. It can save you a lot of time. It can save you a lot of money. And overall, again, just a much better experience. And if you have a family, if you have a wife, if you any of that stuff, they're going through this with you too, or a husband, they're going through this with you too. And you want to make that process as positive as possible and also as financially beneficial as possible long term.
Yep. Yeah. So it's a conclusion of everything. I always say to my buyers or my sellers or whomever is looking for some specific answer for certain things, just go and ask that person who is licensed or does that business on a consistent basis. So the problem being that I have really been a witness of, like, let's say my buyer will come with me and they will, put an offer, right? And someone will go and tell them that, hey, you don't have to put 1.5% earnest money deposit. And they will come and say, I'm gonna do only like $1,500, and because my friend did it and she just bought $1 million property, and that's not really true. So in order for you to look interested in that property and you are serious to purchase that property, you have to put in at least 1.5% of whatever the sale price of the property amount. If it is $300,000, so you have to put $3,000 for earnest money. Earnest money means it's ma'aja ganzab, or they deposit that money in the listing agent trust fund, so that will hold the property for you. So a lot of things that I hear, like, to build your credit, what you need to do, talk to professionals and interview a bunch of different people. I always tell you guys, whenever you hire an agent, just because I referred you to Peter, it doesn't mean that you have to stick with Peter. Interview Peter, how he can help you, how Ida can help you as an agent. Because those people that you're going to be dealing with for 45 days, and also after you close your deal, your property, or after you close the house that you're buying, are those agents going to be stick with you? Me and Peter, we get a call. Hey, I purchased this house 2 years ago. there is some kind of assessment that I was supposed to pay. I did not even know. What do I need to do? And I'd be like, where's your real estate agent? They'll tell me, oh, my real estate agent's not answering his phone or her phone. Just somebody recommended me that, Ida, you can help me. And, I'm like, I cannot just get up and help them. I will tell them where they need to go and get that done. But the real estate agent, even though that our contract is done, like I closed the deal yesterday. It's in my TikTok, actually. Go ahead and look at it to make some comments for me. Anytime I post some stuff, please do that. It would be nice. So after I help them purchasing the property, I'm not going to just walk away from it. These people, they're going to be my client in the future. And also they refer me clients. So because of that, you do what you can do to help your people. I don't care if I even get a client referral. My thing is, the reason that I am in this business is why? Because I wanted to help the community that they can grow big. Hopefully, they can be somewhere one day. So I want you to have some kind of an ability for you to understand that just because we are doing the deal, it does not mean that I'm going to put you big, Peter. It does not mean that, we will walk away from you. So just think through the process. Hold on. Let me put you in there, Peter. Switch you. I'm trying to switch Peter. I am trying to. Hey, you are.
There I am.
I'm trying to put you in there.
Yeah. So just like Ida was saying, so Ben just posted in the chat too. I just saw it. The car that Shaq got was the 1993 Mercedes 500 SEC. So if anybody wanted to know that specifically, thanks, Ben. Ben.
This is a voice thing, right?
Yeah. So if I remember that car, that's a very, very nice car. So even today, if anybody that still has it, is more of a collector's car. But getting back to what Ida saying is, just the whole support package. Because I'd say, even before I ever bought a house, even when I was on the non-originating side, when I was more like background, doing analysis, auditing, all that kind of thing, there was a lot of things about the home buying process that I never really knew or thought about. And especially in an analysis role, it's very detached from emotion. So it's all about numbers and all these things. And so I always thought, the most important thing is, can I get the cheapest value of the property? If it's worth $300, can I try to find one that's worth $300 that I can get for $250? And try to do all these little things. But the other thing I've learned and I'm a very much like do-it-yourself type person, do your own research, huge fan of that. And as a side note to anything we say, I always encourage people, go look it up. Now, be careful who you listen to, because the internet is pretty wild these days. But you can vet it, and there are sources out there that you can say, okay, I know this is a solid source. Let me compare what Ida said or what Peter said. And then some of it's common sense too. Just like, are you working with an agent that only answers your phone when they need you to, get a check out of you, and then after that, they don't want to talk to you again? Or a loan officer who can answer the phone, and then once you close, they never talk to you again. Or you tell them you want to wait even. That's popular, especially when business is booming, that real estate agents and loan officers stop answering the phone for anybody that's not doing it right now. We try to do all of the things, and everybody says the right thing in the industry, by the way. So everybody, if they're sitting there talking about, they're going to say the right things, but it's pretty easy to see how somebody acts. And that's what I'm a big fan of. I'm like, judge me based off my actions, not my words. Because anybody that's in sales know how to say the right thing at the right time to make the sale. But when you work with people who actually do a good job, you can tell, if you watch them enough, that their focus isn't just getting paid. Because that's, from a dollars and cents standpoint, everybody wants to make money. But you want to work with people that are going to treat you well, take care of you, take the time. And then on the other side of it too is like, you also, as the client, need to take it seriously as well. Because, we aren't your parents. We're not, doing this because, I'm sure we like you, but we're not doing this because, it's like you're our child that we're just going to go to the ends of the earth for. So you got to be committed as well. Just like anything, the relationship has to be symbiotic, which is like both sides are going in the same direction, working towards it. We're not going to drag you along, and we're not going to try to just push you along either and force it through, because that's kind of the other side of it, is trying to just really like, okay, just sign this, just do this, don't ask any questions, don't worry about it, use a bunch of technical terms and mumbo jumbo that doesn't make sense, because that happens a lot too. And I think I know Ida's had that come up recently with a few clients that she had with recently. I'll let her talk about it if she wants to, but just where things were not explained well and issues arose later on when all of a sudden people started to figure out, like, wait a second, this doesn't make sense. So, and then again, going not to put everything on you, but ask questions. If something doesn't make sense, if you work with me or you work with Nick, you'll always notice we're always asking you, like, do you have any questions? Please let us know. And feel comfortable to ask us. Like, we want to be able to help you. I know a lot of times clients, Ida will call me and be like, okay, yep. I'm like, yep, I just talked to them. Everything's good. They didn't have any questions. And Ida's like, oh yeah, they called me. They have like 3 questions, but they said they know you're really busy or something else. So they don't want to bug you. Bug us. Because the worst thing that can happen is you call us a month, 3 months, a year after closing and say, oh yeah, I really want to ask you about this, but I didn't want to waste your time, or I didn't XYZ. Like, no, that's why we're here. That's why we help. And, getting back to this whole budgeting thing is, that's why we ask a lot of questions. And it's not because we're trying to be really invasive on your life and know every detail about you or question you. That's not our job, to judge you or anything like that, but it's to understand you, because we talk to people all day long, and some people that seem very similar have completely polar opposite understandings and goals and dreams and all of those things. And some people that seem like they'd be polar opposites are almost identical. And it's like, you never judge a book by its cover. So we try to never do that and let you speak for yourself. So our job, ask educated questions that will elicit answers from you that will help us be able to put that, kind of paint that picture for you. And then you tell us, nope, I want to use these type of colors. I want this to be the background. And so you tell us how you want it designed. And then, because we're the expert at actually designing it, just like if you built a house, you go to the builder and you tell them how you want it to look, but you don't tell them, use this wood, use this type of framing, use this type of shingle. You're trusting them to know those things. And they ask you the questions. Okay, here's the different layouts we have. Which one do you want to use? And here's why this one. And, you might say, I don't know. I like them all. And then they're going to probably ask you questions. Okay, well, when you cook, do you, in relation to like where the bedrooms are, do you want the bedrooms on the same floor? Do you want them above? Do you want them below? Do you want a big kitchen? Do you want a smaller kitchen? Do you want a center counter? Do you not want that? Do you want a dishwasher in the center? Do you want it on the side? Like, they'll start asking you more and more questions. And it's not because they're trying to be invasive. It's just because they're trying to help you think it through. Yeah. On the flip side, if you go in there and you tell them, nope, I know exactly what I want this type of layout. I want this, and this. They're probably not going to ask a lot of questions because you've already answered them. So, they're going to read you and react to you, just like we're going to read you and react to you and just try to help you. And then that's also where our expertise comes up and says, okay, yep, you want the kitchen right next to the bathroom because it fits the layout better, but do you really want the kitchen right next to the bathroom because of this, and this reason? So that's the other thing, is like, we'll try to help point those things out to you. Like down payment assistance is a really big thing right now. Everybody wants it because it's advertised as free money. Not all down payment assistance is equal. Usually the first generation programs, those are the best ones, because usually it's tax dollars at the end of the day that's coming to it. It's anything that's coming from lenders or coming through lenders is usually, they're trying to make money on it somehow. So they're giving you the money up front, but they're going to make money on it long term. It's a trade-off. Nobody goes into business and says, let me give away everything for free. Mm-hmm. That doesn't make any sense, and it's not sustainable. So, and on the realty side and the loan officer side, again, these are sales jobs. So a lot of people advertise that as, they highlight the really good parts and they don't really highlight the negative side or the downside. And again, it's not negative per se if you need it, but it's knowing what you're signing up for, as opposed to, well, for example, a simple example is saying, hey, we can get you a rate of XYZ, and it's 1% lower than the going rate at that time. If we don't differentiate and say, okay, but that's going to cost you $10,000 to get that rate, that's information you want to know. And it's the same thing with the down payment assistance or any of the other features that are involved, is you want to make sure you know everything that's involved, not just the selling point. And so again, that's like, I try to explain that to clients as much as possible, just because we want to make sure that we're educating, we're enlightening, so you guys can build that generational wealth, whether you buy one home or whether you end up buying 6. Like, we want to be able to put you in the best position possible as you go through that journey. So, if anybody has questions that's on here, feel free to ask in the chat. So I mean, that's the big thing though, is education piece. And this doesn't get as many clicks and doesn't get as much. It's not a exciting topic. I had somebody recently say, like, watch one of these TikToks, and they're like, yeah, it's just kind of boring. And I was like, yeah, it is. Like, we can try to do things to make it more exciting and tie it in, but budgeting is not ever going to be this, like, amazing, attractive topic like maybe celebrity gossip or something like that is, just because of the nature of it. But just like a home buying process, when you go through that process, all of a sudden these things become very relevant to you, and all of a sudden you start thinking through it. Just like you might not care much about finance, the details of financing a car, but then when you go to buy a car and they start saying, okay, well, this costs $1,000 and this is $8,000, and all of a sudden we care very much, and we're like, all right, let me see the details of how this all works, because I want to make sure I'm not getting ripped off. I want to make sure I'm getting a good deal, and I want to make sure that the price that I'm paying for this is worth it to me, and based off my priorities. So all those things, if you work with somebody that does a good job, they're not just going to do the bare minimum. They're going to talk through the whole process with you, and that's going to benefit you. And the benefit, like, we get out of this, and not only we get to help you, we can sleep at night because we know that we did a good job. And also, like, I'm a big believer that this is also going to help grow our business, because if people know that we're going to treat them well, then there's a little bit more trust there. Also, if you know other people that have worked with us, they say, yep, they treated us well, they did the right thing, they didn't just say the right thing, but they did the right thing, they backed us up, they were there when we needed them, they supported us, that goes a long way. And in the end, like, not a lot of things in life, in my opinion, are a win-win-win situation where everybody wins. And when we do our job well, I view that this situation is that with the whole real estate thing. If we do our job well, you win because you get the house, you get a good deal, you get good service. We win, we get paid, we help build our reputation, and we get to help our communities. And together we can grow. And the only time that those things usually go sour is when somebody gets greedy and they only think about themselves. And so they trade the long-term benefits for the short-term gain. And hopefully in those situations, karma comes around, because we don't want anybody screwing anybody over or hurting anybody, and vice versa. So do you have somebody else that you want to get on the call, Ida?
Yeah, no, they asked for to come. So I wanted to mention this. When we said budgets and define your wants and needs. Wants የምትፈልጉት አይደለ? ሁሉ ጊዜ need ደግሞ is necessity ነው፣ ያስፈልጋል። እና you know what you wanted to buy a Gucci purse or a Gucci wallet, a Gucci hat or whatever. That's wants, right? I want it. But need, what is your need? You have to define your need. You don't have to buy a property like me or Peter or Nick or Ben. You have to buy property that you can afford, that you can go and take vacation anytime you want. You will have, you're going to build some kind of history, memory in that property with your family. Just don't go and buy $1 million property just because so-and-so had it. And that's why we're talking about budgeting. When I say budgeting, that is exactly what I'm talking about. So me and Peter, we always have client, they were gonna come and say, hey, you help so-and-so. I don't want to buy a property like his property, but I wanted to buy a property, looks the same, and might be a little bit more on the pricing. Who cares about that? I need you to know what your pocket is, what you can afford. And when we talk about budget, know what you're worth. Know how much you can afford. Affordability is a huge thing for us. Guess what? If you go and buy $1 million property than a $500,000 property, guess what? I'll make more money. That is not my problem. It's yours. Just to be honest. Other agents or other loan officers, they might not gonna push you to do those kind of stuff because that's none of our business, right? But when you come to this group of people that, while we are in social media, just because we are a lack of information, right? So, but when we say budget, know your pocket. Know that you don't have to live in this house for 30 years. I think the culture that we have, what it is back home, we live like our parents still live the same property that they purchased before we were born. So because of that, we have that thinking that I'm going to stay in this property until I die. No, there's no such a thing. You can buy it, you live in it, you can rent it, and you can go and buy another one, or you can sell it and do that. I have a buyer right now that me and Peter is working with. He has a property, bought it like in the pandemic time. Interest rate was like 2 point something. But now his kids became an adult. So he wants to buy what? A fourplex or like duplex. Why? Because he wants to sell his house that he lives in right now, wanted to take out that equity and go and buy a bigger property that his kids will live in a different, in a different unit, and then they all can pay their mortgage. So there is an ability to do a lot of stuff. Until you get to it, it's not going to be really, eye opener. I'm like, I'm so happy to hear that. By the way, Peter, let me tell you, I've been in TikTok for almost 2 years, past 2 years, actually. There is 48 people bought a property because of me coming in here, empowering the community. And I'm telling you,
that's awesome.
They boost my ego, and you just don't know. And I text all of them and I congratulate them. There are most of you guys, there's a lot of you guys have not even mentioned a lot to me. And I have another one. I sent him a request, invitation earlier. He bought a property, I think it was a year and a half ago through Miki. And then he just went and bought another property at the end of last year, or at the beginning of this year. So we can run this thing as, whatever. So Salam Aiden, good morning. I muted you because it was a background, so I will unmute you. Then you can go ahead and unmute yourself. Aiden, can you hear me? There is a microphone on the side, so you just click that. Hello? Aiden, are you there? Are you there? Okay, so come back again. I'll drop you. So anyone got a question? We've been talking for 54 minutes so far. And if you guys have a question, you guys can type some in there. If you wanted to come and say hello to us and talk to us, and we can go from there. So I just wanted to mention this. If you guys are living in a different state, there is, what is that, the zero down payment assistance or zero down program? Do you have that, Peter?
So there's a couple lenders we work with who have down payment assistance, and they'll cover up to 2% of the closing costs as well. There's many different programs. One of them has down payment assistance of 1%, 2%, 3%, 3.5% if you're FHA. There's programs that go up to 5% FHA, so 1.5% down, 1.5% down payment, 3.5%, or 1.5% closing costs, 3.5% down payment. So you only have to come up with about 1.5%. But I would say those programs, as a quick summary, like they'll always sell them, and I always talk to them because the lenders sell us too. Because again, being a broker, a lot of lenders, they always want to reach out to us, work with us. I'd say we have a good reputation, so they're always wanting to work with anybody that has a good reputation, that does good work. And so they'll call me, email me, hey, please, can I get a few minutes of your time? Can we go over this? So we do that. And I'd say, the other side to these down payment assistance programs, because even to me, they only kind of tell me the benefits of it. But once we dig into it, anything that's through a lender usually has a higher interest rate. And again, this isn't a bad thing. You're not getting ripped off per se, but it's important to understand it because nothing, again, in life is free. So, there's a lot of lenders, a lot of brokers who offer these programs, and they're not bad. They're there for a reason. But like I always tell everybody, there's a reason I didn't use down payment assistance when I bought my first house, because I know every program out there. I could have used some of them. I know how to finagle everything, but I had the money. I was like, I'm going to do this myself. I didn't, and there's also strings attached and other things. And I was just like, I don't want that. I like my freedom, and I have the money to do this, so I'm going to do it. And I don't want to get other people involved in it. But if that is you, just know that, like, for instance, those down payment assistance programs, if you make under a certain amount, most of them are a 0% loan, whether they're called a grant or down payment assistance or whatever the term is they use. I'd say 75% of them are 0% second mortgages, and you have to pay them back either when you pay off the first mortgage, usually if you ever move out of the house as your primary residence, and some other factors like that, or if you sell the house, then obviously you got to pay it back as well. So 0% loan, still a good deal, but it's not necessarily free money like it might be insinuated in advertisement. Like I was mentioning earlier, those first generation down payment assistance programs that are taxpayer funded, a lot of those are forgiven over time because those are kind of like a social program through the government, where the government says, all right, we're going to take this much money, $100 million, and we're going to give it out for down payment assistance to help people be able to buy homes. So a lot of those then are truly forgiven. Like the Ramsey County one in Minnesota here, over 20 years, it's forgiven. You can get up to like $93,000, up to the first generation one that a lot of us know about is that $32,000 program. That's forgiven over 5 years. Again, first generation, not first time home buyer. There's other things that go with that as well, but they have their pros and cons. The lender program specifically, usually the interest rate's about 1% higher. I say most of them right now are about 7.75 to 8% interest. So you're paying higher. Now they have forgiven and repayables. The repayables, the interest rates are very similar to, they're not much higher than the going interest rate if we didn't use down payment assistance. The forgivable ones, those ones are the ones with a much higher interest rate, because basically, again, you're trading the money now for a higher payment, because that's how the lender is going to recuperate that. So they came up with a solution. How can we help get you in this house? Okay, we can get you in the house. We'll help provide the down payment and even the closing costs, but you're going to have to qualify usually at a lower debt to income ratio. So you can't go quite as high in the purchase price because they want to make sure that you're not over leveraged, especially with the second mortgage, even if it is being forgiven. And then they need to recuperate their funds again, because nobody's donating money to, banks don't mess up their finances and accidentally give away a bunch of money. They know money better than anybody. So we're not going to be able to, you're not going to outthink them. I'm not going to outthink them. They have entire teams of very highly intelligent, educated people who are putting these things together. And so I have clients sometimes ask me like, they try to kind of like thread the needle, like, oh, can we do this and do that? And it's like, trust me, they've thought through all those scenarios. And if there's something they missed the first time somebody did it, they fixed it so that wouldn't happen again. So all that to say is there's just not a lot of free money. And I see a lot of advertisements, not to pick on realtors, but realtors, because they don't do the financing, don't usually understand it quite as in depth as like a loan officer, because that's our job, is literally the financial part. Just like I probably don't understand the real estate side of it as well as Ida does, because that's what she does every day. And so they advertise all the benefits, and a lot of people call them, and then they realize like, oh, there's this and this and this and this. So, I'm sure they're well intended. They're trying to put it out that there are options, but a lot of people, just from my experience, they gravitate to best case scenario. Hey, I'm going to get $20,000 for free. All I got to do is, sign up, fill out a couple forms, and I got money. Like that's not how the world works. So if you are interested in those programs, we can always look at them. Like I said, they're definitely designed for certain clients. But if it's not a government funded thing, and the banks are funding it, there's a way that they're making money off of it. And again, they're not necessarily ripping you off, but they're trading. You guys are trading something. You're trading the down payment now. They're trading a higher payment or a higher interest rate so that they can recuperate that. So it makes sense, but it's just important that you as a client understand that, because like I said, it's not always advertised that way.
Yep.
So
yeah, that's why I wanted to do a little clarification for us, because a lot of people, they have misinformation out there, especially with the down payment assistance, what's in there for us. So I think the last topic that I really wanted to talk about is, yes, we talked about budgeting and about the down payment, yes, but there is a huge talk about FHA financing not approved or is not settled yet for green card holders or work permit holders. Would you, I don't know if you already went through the whole process with your company, but just wanted to understand what is all those puffla, like everybody were talking about it. It was like breaking news, and everybody putting on the TikTok and having video out there to trying to literally make this immigrant who actually trying to buy a property through FHA. And by the way, to be honest, most of the client that I'm dealing in our community, I am so proud of you guys. You guys' credit, it is untouchable. A lot of people do not have that kind of good credit, even people that were born and raised in the US. And I'm not just saying it, I am telling you the truth, because me and Peter, we might gonna have 2 or 3 clients a year that they have to go to an FHA. The rest of them, Peter worked with them, and then we deal with them on a consistent basis to build their credit, not to go to an FHA, because we don't want them to pay the premium fee that they charge you when you close your house. So I just wanted to understand. I read about it a little bit while I was on vacation, but I decided I am on vacation. No work, no investigating anything. So because you do these things on a consistent basis, what is going on? What is out there? I know they're fearing a lot of people. I got an email, even people who purchased property through work permits, they're kind of freaking out. Am I going to lose my house? So would you walk through a little bit about that situation for us?
Yep. Yeah. So it's a good like current event issue. So So Bill Pulte, whose grandfather started Pulte, the builder that we all know of. I think they're the third biggest builder in the country behind D.R. Horton and Lennar. He was nominated as the FHFA director now, so he's over basically all of housing in the country. FHA is specifically government funding or government-funded loans. So conventional loans are through Fannie and Freddie, they're called. Since 2008, they've been technically still private companies, but they're kind of overseen by the government because of the whole housing crash. But FHA specifically, the change that they made, and there's still things coming out and they have not gone into effect yet. So not getting into politics, but a lot of the stuff that comes out right now in this administration is they make announcements, they kind of see what the feedback is from the public and everything else, and then sometimes they come back and change things. They're not, I would say, an administration who comes out and says, all right, we're going to do X, starting a month from today, this is how things will be, and that's it. And then they never change it. A lot of times they come out, even the tariff stuff, like today at, 4 o'clock Eastern, I think, is the big tariff news, all sorts of terms for it. People are calling it Liberation Day, and there's all this, hoopla around it, whatever. But there's been a lot leading up to today about, too, like who's going to get tariffs, how much are the tariffs going to be, and it's been changing, it seems like, every day. I stopped paying it. I usually pay attention to this stuff, and now I stop because it's a waste of time, and I'm like, we'll see what happens when it happens, because I feel like every day I was reading about it, and now this country is being tariffed, now it's not, now it's 20%, now it's 5%, and just a bunch of useless information. So getting to FHA, the change that they made, first off, it doesn't go into effect until May 25th. So as long as you have your FHA case number, which your loan officer is going to require or request for you prior to, once you sign the disclosures that we request it, usually it takes a couple hours, we get it back. As long as it's requested before that May 25th deadline, then what I've been told is that you should still be able to proceed. But the new change they're making is for non-permanent residents. So if you have a green card, my understanding right now is you should still be fine. But like I had a client in January that I closed that was on here, had an asylum visa. My understanding is she would not be eligible at this point and she's had asylum since 2019. She's college educated in the United States, has a very good job, very, type of person you want living in your society, not a criminal, like all the things that you'd want, model citizen type of person, even though she's not a citizen, wants to become a citizen. But with those asylum visas, there's a lot that just kind of sits in the air. She reaches out to them. She said every few months, and they're always just like, it's still in processing, no update. But she bought her house in January, and my understanding is she would not be eligible because she does not have a permanent residence status. So and they're still ironing out, as far as the different visas and things go, which ones qualify and which ones don't. And so if you come to us, I always get your visa, and then I always run it through our system too and say, check your specific visa. If you have a VS1 or whatever, all the different ones, because there's many different ones, many different letters standing for different types of visas and residency. So we'll always check that for you too. And if you want, you can even call us and say, hey, am I eligible? And we can check that. But that does not kick in until May 25th. Yeah, May 25th is the date. And I wouldn't be surprised, because it's about almost 2 months away, if there are any changes to that, because there is a lot of backlash that's coming back from different communities, from the housing community, the immigration community, all of that. Not a big fan of this change. And so I get where the administration is coming from, but at the same time, I think I won't say my opinion on that, but it seems like it's not necessarily just housing driven, because that's still a small percentage of home buyers anyways.
Exactly.
And so I'm not sure why all that became such a big deal, but there is a lot of fear mongering There's a lot of people that are taking it out of context and misreading it. There's a lot of telephone going on where I tell Ida something, she tells her husband, and then he tells his friend, and then that person goes on TikTok and says, if you're not born in the United States, you won't be able to buy a house ever again. Don't listen to all that. Let's wait to see what actually takes into effect. And if you already own a home, they're not going to come take it from you. You'd have that type of thing happen where they're going to kick you out of the country. So that would have to be I would not be worried about that at all if you already own your home. I have not heard anything about, and that would go to the Supreme Court. There would be major legal issues if they try to do something like that.
Yep, that's what I thought, but I just wanted to make sure. I got a couple of calls last week after a lot of real estate agents posted this, and a lot of lenders. So just, I want them to just understand, I don't want them to have a fear. There's always things happen, things change for a reason. It might be for good and better, we don't know. But what I wanted to have with this to conclude our session today, we've been in here for an hour and 11 minutes to be exact, before the music stuff. Anything else, Peter, that you wanted to put in?
No, I'd say so. Next week, and I was going to ask you, I guess I could ask you this offline, but would it be good to set up I'm still getting used to TikTok, but I think you can set up an event ahead of time, right?
Yes.
Should we do that? And then people can register for it, and then it'll notify them too?
Yeah, I don't know if you can do that on TikTok. I'm not for sure, but we can do some kind of commercial. What would be our next session? That what we're going to talk about. I think if we put that, if people will come out with their own questionnaire as well, it can be off topic as well. I want them to just be free to come and ask. If you guys are speaking Amharic but don't speak English as that well, I am here to translate for you guys. Ben Retta is here to translate for you guys, so interpret. So we are here to support you guys regardless. So it does not matter what state that you are. Mortgage is mortgage, financing is financing, real estate is real estate. So it doesn't mean that you have to be in a certain state. And also, if you are here to purchase property this year, please, 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 please ask your lender that what kind of program would they have for you, and then understand the pro and con, the negative and the positive of that program. And then if that's something that you wanted to hop on, go ahead and do that. Let's not wait until when you have 2 months to get out of your rental. We have a client right now. They have to get out of their house by May 1st. We just put an offer last week, and they put an offer the property that they probably would not even wanted to buy, because they will pick and choose what they want, and time fly fast. So I just want you to really know the wants and the needs, the budget that we talked about today. I think that's one thing that I want you to understand. So, and Amharic, የምትፈልጉትን ቤት ቼክ አርጋችሁ አፎርድ የምታደርጉትን ፕራይስ መክፈል የምችሉትን ፊግርድ አውት አርጋችሁ ቤታችሁን ለመግዛት ተሂዱ እንጂ don't just buy a property for the heck of buying property. Okay? So I'm gonna say, just let you guys know who I am. I am Ida Tazara. I am a CEO of Gojo Realty and Plaza Team Lead. And also we manage property in the state of Minnesota. And if you need anything buying or selling property in any state, if you need any information, we are here to support you. We are here every Wednesday with loan officers and insurance agents to come here to explain to you guys what's going on in this world, what are the stuff that you need to watch on Sunday, as you guys know, I am here on Sundays, 4 to 5 hours. And we talk about anything about buying or whatever. And we have, guests here and there. But I speak in Amharic at that session. The reason that I brought this intellectual financing people, because as you guys know that I don't do financing, so they will be able to explain to you guys in detail. So if you guys wanted to reach out to me, you guys can reach out to me, anytime. Also, you can search me at Gojo Realty. If you Google me, you'll find me. Aida Tazara. You guys will find me. We are on live right now on YouTube as well with TikTok. So please contact us if you need anything. So I will open the mic to Mr. Peter Jerf, and then he will say his stuff, and then we'll close for the day.
Okay, awesome. Yep. So I'm Peter. I'm a licensed loan officer here in Minnesota. With my company name is Custom Made Mortgages with Nick, who is on the call. He hasn't been speaking today because he's not feeling great, but Nick and I, it's our company here locally in Minnesota, and we're more than happy to help anybody if you have questions, but we are licensed here only. So if you're in another state, either Ida or I could help you find a loan officer that's licensed there. And then I will say next week, I am going to be out of town at a training. So at least I won't be on here. I don't know if you and Ben will still want to come on here, but both Nick and I are going out to that, so we won't be available because we'll be in class at that time. But then the following week on the 16th, we're planning to talk about like the pre-approval process, specifically what we need, why we need it, answer any questions regarding that. And so please come with questions. We'll probably try to promote that a little bit because that usually is a hot topic. And there's usually a lot of questions around why do we ask for what we ask for? Why is it so invasive sometimes? We need all your personal information. And then, just any one-off questions you have about that process, because there is a lot of misconceptions about that. And also different brokers and different lenders do different depths of that process. So some of them do a really quick, easy one, which is easy in the beginning and kind of creates problems later sometimes, but we'll go into all that later. So yeah, come with questions, come ready to learn, and we'll try to give you that whole picture so you can understand why we do what we do throughout that process. And at the end of it, realize why it's a benefit to you. So
Perfect.
Yep.